Welcome, cafe owners and restaurateurs, to the very first episode of The Tough Get Going, a show laser focused on helping Aussie business owners take back control in these very, very uncertain times. I'm your host, Tim Reed, from the Small Business Big Marketing podcast, and for the next 90 minutes, you'll hear from leading specialists who have kindly donated their time on the hot topics of government grants, management of overseas workers, employment law, and that's just a start. Before we dive in, could you please let me know, just to make sure I'm not speaking down a silent tunnel, that you can hear me by saying hi Timbo in your comments box on Facebook. Awesome. Just having a look. Yep. Okay, I can be heard. Now, this series has been put together in recognition that COVID-19 is causing much angst and uncertainty amongst business owners across many industries who have put their heart and soul into building a business they absolutely love. So through the ideas shared today, it's our aim that at least some of this pain and uncertainty is removed, allowing you to focus on successfully navigating yourself, your staff, and your precious business through to the other side. We also acknowledge that the playing field changes daily, almost hourly. And whilst we aim to stay across all current decision-making by the various government bodies, we're not going to always succeed. So please be sure to do your own investigations before acting on any advice shared here. Today, we're focusing on the hospitality industry, and the format is really simple. You'll hear from three specialists who will cover government grants, ATO support, the JobKeeper scheme, employment law in regards to overseas workers, and plenty more. Each specialist will be joined by Michael Busquetta, who's here to represent, well, you. Michael is the co-owner of the award-winning Bar Liberty in Melbourne, along with Capitano and the Falco Bakery. He's also the founder of Worksmith, a community hub for the hospitality industry, also based in Melbourne. Welcome, Michael. How would you sum up the general feeling amongst your industry right now?
It'd certainly be the toughest thing anyone in the industry has experienced to date.
No doubt. So our aim, obviously, with this first episode is to soften some of that toughness and give some sort of practical solutions. So more from you in a minute, Michael. Thank you.
Thanks, Tim.
Each specialist will spend 20 minutes sharing strategies you can implement immediately, plus answering key questions from Michael, which are no doubt also at the forefront of your mind as an owner of a business in the hospitality industry. At the end of each segment, you'll then have 10 minutes to ask any question of the specialist and Michael. If you have a question, please send it through the chat box at any time. Don't wait for the Q&A, you might not get in. So please send them through at any time. Be sure to keep them short and sharp. If we need more information, the specialist will ask. And a full recording of each session will be made available on Facebook within 24 hours. More on that later. All right, let's meet our first specialist, who will be shedding light on how the government stimulus packages can work for you during these uncertain times. He's a partner at the Melbourne accounting and advisory firm Matthew Steer, acting as a specialised tax advisor across multiple industries. Along with Michael's questions, the two key questions he'll be answering are: how does the federal government's cash boost payment work? And what relief can you access right now from the Australian Taxation Office? Please give a warm virtual welcome to Charith Mandadish. G'day, Charith.
Hey, Tim, how you going?
Good, thank you. Over to you.
Thank you. Good morning, everyone. To start with, Tim, thank you for having me. I know this has been put together over the last week or so it's a great job putting this together. I've been asked to briefly talk about this cash boost payment, which was part of the federal government's stimulus package that was announced on the 12th of March and followed by the legislation on the 20th of March. So in a world that things are changing really day by day, if not every hour, this is considered old news. But I do think it's worthwhile spending a bit of time talking about this for a couple of reasons. A, it could potentially provide a significant cash boost to small and medium businesses. And B, the way that the provision works, there's still a level of complexity that sits behind them. Now, like I said, it's been out since the 12th of March, so there's been a fair bit of media coverage through mainstream media on this. So I don't necessarily want to go through every single detail. What I'll do is I'll spend about a minute just quickly going through some of the basic provisions that applies in this particular scenario, and then perhaps focus on some of the key questions that's been coming towards our way from our clients since this was announced. So basically, in summary, it is a cash boost payment that's been aimed to provide a relief for small to medium businesses. In order to be eligible, you need to have an aggregated turnover or an income of less than $50 million in the last financial year. You must also have an active ABN as of 12th of March 2020. So that's when the announcement initially came through. You must also have employees whom you make payments to that are subject to withholding, which is generally be the case if you do have employees and paying their wages. Now, how much you get will depend on a couple of things, which I'll get to in a second. But if you're eligible, so i.e. meet the basic criteria, you are eligible to the minimum benefit amount of $20,000 with the maximum benefit amount of $100,000. Practically, it will be paid or processed between April and October this year, so effectively across the next 6 months or so, and it will form part of your quarterly GST or the BAS return. The other important thing about this is that any amount that you're entitled to under this particular provision, so let's say if that's $30,000, it will be tax-free in your hands as a business owner or the taxpayer. So what that means is if you're entitled to $30,000, when you go and do your tax return for the 2020 year, you don't have to pay tax on that, which is once again welcomed as well. So like I said, that's probably the basic conditions, which most of you would have been aware across the media over the last couple of weeks. Now, since this was announced, there's been a couple of questions that's been coming towards our way, which I thought worth sharing. The very first question with any of these is really, how much am I eligible for? How much am I going to get back? Now, this is one of the tricky things about this particular provision because it really depends. It depends on a couple of things. First, it depends at the frequency which you withhold PAYG, and then it depends on the actual amount of PAYG which you have withheld for a particular period. So for those businesses who were operating in the last year, if the total PAYG withholding for the last financial year was over $25,000, you would have been required to report PAYG to the ATO on a monthly basis. But for those whose PAYG withholding was under $25,000, you would have only been required to report to the ATO on a quarterly basis. Now, that frequency does have an impact in terms of the entitlement under this particular provision. So if you are a PAYG withholder on a monthly basis, the amount that you are entitled to under this particular provision depends on the amount of PAYG withholding for the month of March, April, May, and June. So effectively that 4-month period. However, if you're a PAYG withholder on a quarterly basis, the amount of entitlement will depend from the month of January 2020 all the way up to the June 2020. So effectively 6 months. So that's where the complexity comes in a little bit, because depending on the frequency at which you withhold PAYG, that it may change the period you're looking at, and therefore effectively the amount that you're entitled to. The other question I get asked a fair bit is, if I'm a sole trader, so I'm effectively operating under my own name, am I eligible for it? And the short answer is yes. Once again, as long as you meet those basic criteria, which was under 50 mil, active ABN as of 12th of March, and have employees, you're still entitled to at least the minimum amount of $20,000. So the way that's been written, it doesn't differentiate between different trading platforms as to whether you're a sole trader, company, or a trust. I also get asked, what happens if my PAYG withholding is relatively low or even zero? Now, that could potentially be the case if you have employees who you make wages to is less than $18,000 a year, which is effectively the tax-free threshold as it stands today. So you wouldn't have been required to withhold any PAYG. But once again, it goes back to those basic rules. As long as you satisfy the basic rules, you're still entitled to that minimum benefit amount of $20,000, even if you don't have any PAYG withholdings. I also got asked an interesting question in relation to ATO debt. So a client might ask me, what happens if I have existing ATO debt, which might be under a payment plan or which might not be, and I'm entitled to an amount under this particular provision? That's an interesting question, because when the provision initially came out, it wasn't that clear in terms of how that works. Since then, we have been in touch with the ATO, and what they have verbally confirmed is that because this particular entitlement works through your BAS or your GST return on a quarterly basis, any amount that you're entitled to will first be offset against whatever the BAS liability is for that particular period. But if after offsetting that amount, there's an amount left, that amount will be physically refunded back to the businesses. And that's even the case if you have an old ATO debt with the ATO. Now, I think that's the right thing to do, because the entire purpose behind this provision is to put cash back into the businesses to promote economy and jobs as well. So that's probably enough from me, and that's a couple of the basic requirements and a couple of the key questions that's been coming through my way. But given that we have Michael on board as well, I'm interested to hear from his perspective, given he's a business owner as well, in terms of how he's dealt with this particular provision in his business.
Thanks, Jared. Thanks for going through those items. Really helpful. I had a few questions. One being, how does the provision work if someone has multiple businesses or operates the same business through multiple entities?
Yeah, that's a good question, Michael. I might actually answer that through an example. I do have a client of mine who's in the automotive industry. So his business is nationwide across multiple states. And believe it or not, he actually has 16 different entities which he operates the business through. Now, that's for various reasons that he wanted to set it up in a way. So when we were looking at his entitlement for this particular provision, one of the things we had to go back to was those basic rules, which requires you to have an aggregated turnover of 50 million or less in the last financial year. So when you have multiple entities or multiple businesses, what we need to focus on the word aggregated, which basically requires you to tally up all your income across the multiple entities or multiple businesses for the last financial year. Now, if you then come under $50 million as a group, then you tick that eligibility criteria. The grouping provision only applies at that revenue level. So if the entire group is eligible, then each of the entities becomes eligible up to a payment of $100,000. So in this particular case, our client had an aggregated turnover of about 36 mil last financial year. So therefore he ticks that $50 million rule. And because each entity employs people and had an active ABN as of 12th of March, he could potentially be entitled up to $100,000 for each business unit, which in this case, because we've done the numbers, we actually do know that he's entitled to. So through this provision, he will receive up to about $1.6 million across the next 6 months across his group, which is quite substantial for him.
Yeah, absolutely. Great. Thanks for clarifying. You also mentioned the eligibility is based on income from last year. Yep. But how does that work for new businesses if they weren't operating in the previous financial year?
Yeah, once again, that's a good question as well. It's actually dealt through in the particular provision. So there's an alternative test. So the first test is to look at last year if you had a business to see if you're under $50 million. But the alternative test basically looks at your operation from 1st of July this year all the way up to 12th of March when the announcement came through. So for those businesses who have set up after 1st of July, so in the current financial year, there's a couple of criteria. A, that you must have been registered for GST. B, you must have at least had $1 of sales. And C, and this I think is the most important thing, is that you must have reported that particular sales, generally through your BAS return, to the ATO before 12th of March. So as long as you have reported, i.e. lodged a BAS with the ATO by 12th of March, then you are entitled to. So there's a potential risk element for new businesses who operated in this financial year who are not up to date with their reporting obligation. They potentially could miss out on an entitlement worth up to $100,000. So I think that once again goes back to the basic principle, even on good terms, that you should be keeping up to date with your reporting obligation in a timely manner.
Okay, and if businesses do in fact miss out because they're not up to their reporting, are there other incentives or breaks that can assist them, or they miss out completely?
Yeah, that's the part that's a little bit unclear at this stage, because we've seen the law, and the law is very strict in the sense, you got to kind of meet each of the criteria. But I believe that there might be some discretion that's allowed generally through the tax office. So for a particular reason, you are operating the business and you couldn't have your reporting obligation up to date for whatever reason, there might be certain discretions that's allowed by the ATO. But I think we're just going to have to wait and see practically how that works. But if you read the law to the strict guidance, there's only those two tests which apply strictly. But I do think that if you are in that scenario, contact the ATO, explain your situation, and I'm sure they potentially might be sympathetic to your scenario.
Thanks, Ruth. Just to move in a slightly different direction now, are there any reliefs or concessions offered by the ATO in the current environment?
Yeah, just much like any of the organisations at a government level, they have responded. There are a couple of reliefs that are available depending on the type of taxpayer you are. So one of the first things I'll recommend to everyone that's listening is go to the ATO website, which is pretty easy to find. Just do ATO on Google and then search for COVID-19 relief or concessions, and they basically list out all the concessions that they do have. There are two particular things that I probably would touch on. The first thing is if you're affected by COVID-19 or the restrictions that are put in place, you do have the ability to delay any payment that are due to the ATO after 23rd of January, all the way up to 6 months. So if you had to, for example, pay your tax debt or your GST in March, let's say, for example, and you're affected, you have that ability to delay that up to 6 months. Now, we had this experience fair bit over the last week or so where we contacted the ATO on behalf of our clients, and then we were able to delay those payments all the way up to December, so even beyond that 6 months. So that's always in your hand in terms of managing your cash flow. The other key thing is for those businesses who might have been under what we call a PAYG installment system. So for those businesses who might have been operating for a number of years, because of the level of profits that they have made in previous year, they might have been required to pay tax on a prepayment basis on every quarter. So they might have to pay $5,000 each quarter. Obviously, the ATO recognized that given the current circumstances, the cash flow is going to be tight. So what they're allowing businesses to do is that if you are under the PAYG installment system, you have the ability to vary your March quarter installment to zero. So whatever the amount that they're requiring you to pay, you can basically vary that to zero. So i.e. not pay that, but also have the ability to claw back any payments that you might have paid in the September and the December quarter. So for a client that potentially may have to pay $5,000 every quarter, you can vary your March 1 to zero, so you don't have to pay that. Not only that, you can potentially claw back the $10,000 that you have paid across September and the December quarter, which once again potentially could help with cash flow. So that's an important thing, which I don't think a lot of people are aware of. So once again, I do recommend to check out the ATO website and use that if that applies to in your particular scenario. There are a few other things as well in terms of interest-free payment plans and deferrals that the ATO is offering. And the best thing to do is really, if you're struggling in terms of either meeting your reporting obligation or your GST liability, just get on the phone and talk to the ATO. Now, I probably shouldn't be saying this, but just like any organization, the response you get from the ATO does depend on who you get on the other side of the phone. And I definitely shouldn't be saying this because even in practice, when we don't get an answer that we don't like, we hang up and call back again. Now, it shouldn't be the case, given that we're dealing with an organization, but that's what the reality is. So, if you don't get an answer that you don't like, just hang up and call back again. And perhaps maybe keep calling until you get the answer that you want.
Great. Thanks, Ruth. Thanks for clarifying. Great advice, just to keep trying.
No, absolutely. I think we're all going to have to do the same thing for the next couple of months here, at least.
Yeah, absolutely.
Okay.
Charith, thank you for that very insightful tip on the tax office. I'll be taking that one to the bank.
We shouldn't be saying that, actually.
Keep calling until you find the operator that gives you the answer you're looking for. I love that. I knew I tuned in for a reason. Hey, thank you guys. Stay around because we've got some questions coming through. Sarah is asking, how do I go about applying for the government assistance? Should I be using my accountant or bookkeeper or doing it myself?
Yeah, that's a good question. And once again, the answer, it depends, because like I said, there are a number of reliefs that's available both on the state and the federal level. So if I go back to this particular one that I talked about, the cash boost payment, as long as you meet the initial eligibility criteria, you are automatically eligible. And the process will be done when you lodge your BAS. So with this particular one, there is no separate application process or a form that you need to go through. The only thing you need to do is continue to lodge your GST or your BAS return every quarter. But it does depend which particular concession or the grant that you're looking at. Right. Because some of them may have an additional reporting requirement or additional step that they might have to do.
Yeah, and if anyone's staying across it, it's going to be your accountant. Certainly, that's what I'm finding. We've got a question from Joe Charith. Joe asks, I think you might have touched on this, what's the turnaround time for actually receiving the money? And obviously the money could be from different pots, and I'm sure the turnaround time is different as well. But
Yeah.
How do you answer that?
Yeah, absolutely. Now, once again, with this particular concession, because we're looking across a period of 6 months, which forms part of 3 GST returns. So you got your March quarter GST return, June quarter, and then the September quarter. So what the ATO basically is saying, when they're processing those effectively each of the BAS, it will go back to the due date for each of those particular BASs. So for example, the March quarter BAS is not due till the 28th of April. So even if you lodge your BAS today, for example, because the March quarter just finished, you potentially may not get the physical refund up until the 28th of February. So for the month of March, it'll be 28th of April. For June, it'll be 28th of July, and for September, it'll be the 28th of October. So effectively within 28 days after the quarter finishes.
Yeah, okay. Charith, thank you so much, buddy. That's the end of the questions. I'm going to encourage everyone listening to put their questions in the comment section under the video that you're watching on the Facebook group. We will answer them all. Charith, you can be contacted through your business's website, which is matsteer.com.au. And again, Charith, thank you so much for giving us insights into those pretty important topics about getting money from the government.
No worries. Thank you, Tim, and stay safe, everyone. Thank you.
Michael, before we get stuck into our next specialist, I'm just going to bring you back. You got your finger on the pulse. You've got 3 cafes, restaurants in Melbourne. You've started this Facebook page, COVID-19 Facebook page for the hospitality industry. There's a lot of bad news out there.
Yeah.
Question without notice. Is there a good story that you can share with us just briefly of a or a restaurateur that's just found a new way of doing business?
Yeah, absolutely. I think throughout this time, I've said over the last few weeks, each day, that you see the best and the worst out of people in these times. And I'm really proud to say that it's usually weighted on the best side. So seeing a lot of restaurant and venue operators pivot into new areas of business, whether it's turning their stores into grocery stores, doing delivery to their local area, and really utilizing the staff that they have to keep them employed in some way and keep them busy, has been really gratifying to see that that community really pull together.
Yeah, it's awesome. And whoever thought you'd be buying hand disinfectant from a brewery, a craft brewery?
Yeah, breweries, distilleries, everyone using their equipment for good, that's for sure.
It's awesome. Lovely to see that innovation. There is a silver lining to everything, I guess.
Absolutely.
Michael, thank you. We'll be coming back to you shortly.
Thanks, Tim.
Coming up after the next segment, we'll cover how to deal with overseas workers. But right now, our next specialist joins us to demystify the JobKeeper scheme. She's the principal at KR Legal, a firm specialising in workplace law, and in the past few weeks has been flat out advising clients on how best to adapt to the current environment in regards to the management of employees. Along with Michael's hard-hitting questions, she'll be covering who's eligible for JobKeeper, how does the scheme work, and what employees need to consider in relation to the scheme. Please give another warm virtual welcome. We can hear you clapping to Katrina Raymond. Hello, okay. Katrina.
Hi, how are you?
Good, over to you.
Okay, well, good morning, everyone. Look, prior to me starting, I'd just like to say how sorry I am to see the hospitality industry in this predicament. And I'm very grateful to join the webinar today to hopefully provide some help to you all in relation to the JobKeeper scheme that was basically ticked off by the government last night. So my understanding from my conversations are that most employers have a pretty good general view as to how it works. So what I propose to do is kind of provide some fast facts as to how the scheme works, and then answer some questions from Michael that will hopefully address some matters that aren't apparent from the government fact sheets. I should also mention that the Fair Work Act was amended in the last couple of days to provide employers who are eligible for the job seeker payment more flexibility in relation to being able to stand down employees employees, sorry, which is actually called a JobKeeper stand down. This new stand down allows a JobKeeper employer to direct employees in relation to their duties and the location at which they work. And by agreement, which an employee can't unreasonably withhold, employers can change their days and times of work, and also direct them to take annual leave. I'm sure a fact sheet will be issued by the government that will be available probably in the next couple of days, if not sooner. There are some preconditions as to when employers can do this. There's quite a few boxes to be ticked off. If you like, I can, if I have any time, I can talk about this a little bit further later. But for now, I just want to outline some really what I would call some fast facts in relation to the scheme. So you may all know basically what I'm talking about, but hopefully I will be able to tell you something that you don't know. So first of all, if you haven't already, get your hands on a couple of fact sheets that are on the government's website, treasury.gov.au. I understand that they're going to be put up on this Facebook page at the end of this talk. They provide a really good summary as to which employers are eligible for the scheme, which employees are eligible, and in particular to one confusing fact for a lot of people, which is how the $1,500 is actually paid to employees who are earning different levels of income. So I think that, you know, if you want to really understand the scheme, what you've got to do is kind of think about its purpose. And that basically is to keep employees on the payroll so that they're available to basically pop back into work when things start to turn around for businesses. So let's just really briefly go through the scheme and how basically you can get in there and be part of it. Eligible employers. Basically, if a business has a turnover of less than $1 billion, you have to have a downturn of 30% or an estimated downturn of 30%. And the evidence of the downturn has actually been clarified in one of the fact sheets that I just mentioned. They're looking at people's business activity statements, but the ATO has said that they're not going to be rigid in relation to that, and they will apply some alternate tests, particularly in relation to businesses that have been running for less than a year and they don't have a comparable period there for the year before. You need to tell the ATO and register that you want to be part of the scheme, and the scheme does include sole traders and self-employed people. In relation to which employees are eligible, it's all full-time, part-time and casual employees. And what you really need to do with your casual employees is make sure that you include only casual employees that were on the books as at the 1st of March, and that could be termed as being regular. And I'll talk about that a little bit later. This includes employees who are working, who are on standby, and employees that you may have made redundant after the 1st of March can in fact be rehired, and then they will be eligible for the payment. Now there's, and it's been quite controversial, as you probably all have heard, certain visa employees who aren't eligible, but Jamie, who knows more about that than me, will talk about that in the next talk. Okay, so how is it paid? It's actually paid to employers. That probably creates a little, or quite a bit of an administrative burden on the employer, especially for small businesses. And hopefully everybody will be given by the ATO some assistance in relation to that. One of the things that's people have been really confused about is how does the 1,500 payment actually work? So briefly explaining this, but there are some very good examples on those fact sheets that I just mentioned. If an employee has been stood down, they are basically entitled to the $1,500 a fortnight. If during a fortnight an employee has been earning less than $1,500 a fortnight, or is still working and earning less than $1,500 a fortnight, they are entitled to $1,500. So those employees make a bit of a gain. Now, employees who are currently paid more than $1,500, let's use an example. We have Jane, who's earning $2,000 every fortnight. She will continue to be paid $2,000 a fortnight, and the $1,500 will be used as a subsidy. That will be paid as a subsidy to the employer in order that it can keep on paying Jane, and effectively Jane's wage for that fortnight will cost that employer $500. Now, the one thing I haven't mentioned is at this stage, this scheme has only been legislated to continue for 6 months, but I did note that there is a possibility that it could be extended. So, of course, we'll all be told about that. Superannuation is not payable on the $1,500. And the payments which are meant to be made from round about the 1st of May actually go back to the 30th of March. So employees basically will start getting the payment from the 30th of March. So there should be a bit of making up to do once the first payment comes in. So what do you need to do for now? I'll leave you with some takeaways. You need to register if you think your business is eligible with the ATO, and you need to provide them with some evidence of the downturn in your business. And I've said that's probably by a comparison of your business activity statements in the most recent month, or compared to a month before. They should try to be comparable months. Or if you can't do that, they've said that there can be an estimate. But what's not apparent to me is what is required in order to, substantiate that estimate. So you might want to talk to the ATO about it, and I'm sure there'll probably be some more information coming out about that. You also need to advise your eligible employees as to who could be eligible for the payment. The difficulty, as I mentioned before, is working out who are your regular casuals. Be careful there, because one of the things that is in the legislation is the ability for the ATO to recover payments which shouldn't have been made. And in particular, if they think that there's been some devious scheme entered into by an employer in order that payments have been obtained that shouldn't have been, there's very significant penalties, and people could also be subject to criminal prosecution. Okay, so 2 takeaways: register, evidence of downturn, choose which employees are eligible. And then once you've got that in place, consider the new JobKeeper stand down provisions as to how they could help you keep your eligible employees working. And also the fact sheets are really good. So I think now is a good time to bring back in Michael to ask any questions that may be helpful to any of you out there.
Thanks, Katrina. Thanks for going through all those points. Obviously, being passed last night, there is some more details coming through. We've certainly made use of the JobKeeper scheme. It was brought in last week, and we've been able to really bring in some employees that were stood down a number of weeks ago, as well as increase people's hours. So it certainly helped from our venues. Now, similar question that I asked previously around new businesses, and can their reduction in turnover make them eligible for JobKeeper?
Yes, as I just mentioned, the ATO has indicated that they're going to provide some flexibility in relation to, exactly what evidence they need to establish or an estimated downturn. That's to some extent outlined in one of the fact sheets that I referred to before. And it also may be something, if you've got an accountant, you might want to get some advice on as well.
Great, thank you. My next question is will certainly relate to most hospitality businesses throughout the industry, and that's for people that have pulled the trigger quite early and had to make people redundant because of cash flow issues, obviously. And if someone's been made redundant, does the employer have to then re-employ them under the same terms and conditions of their contract in order for them to receive the JobKeeper payment?
Yeah, this is a question I've been asked by quite a few people. Basically, you don't, but what you've got to do is you've got to enter into a new employment agreement. That's pretty much been the situation prior to yesterday, and in order that you can do that, you needed to have the employee's consent. However, the new legislation, as I mentioned before, allows employers to change to reduce working hours and location of those employees who are receiving JobKeeper. There's a few preconditions. Basically, they have to establish that this is necessary in order that the business can keep operating, and that the employee or the relevant employee can't otherwise be usefully employed in their business. The employee does need to be paid the same rate of pay, and they can only work hours that will equate to basically $1,500 to what the JobKeeper payment is. And turning matters on the head, for a change, it's the employees who can't unreasonably refuse the request, as opposed to when employers are placed in that position.
Okay, thank you. Just a little more detail around the contracts. Do you need to draw up a whole new contract, or can there be an amendment clause?
I recommend that you do, yes. Look, what you can do, and what I usually recommend that people do, is if you've got an existing contract, basically draft a letter and say, for this period of time, it's been agreed that these terms and conditions of your employment agreement are going to be varied, and this constitutes a variation of your written employment agreement, and get the employee to sign a copy of that letter and place that in their file.
Great, thank you. The next question has actually been asked a few times in the COVID-19 Facebook group, and it's around can employees who have been stood down then undertake other employment and then still receive the JobKeeper payment from their primary and original employer?
Yeah, yes, they can. That's always been the situation, but the amendments that have been made to the Fair Work Act basically expressly say that they can. They do need to have the employer's consent, and I would anticipate that usually has been because they don't necessarily want the employee to go and work for a direct competitor. That's probably not so relevant in the hospitality industry, I'd anticipate. I think it's probably more relevant where you have businesses where there's a significant amount of confidential information that they don't want the employee to unwittingly often provide to another employer.
Hey,
Okay.
Katrina and
Thank you.
Michael, I'm going to just pause. Thanks for those questions, Michael. That's awesome. Hang around. Charith, if you can hear me, please come back because we're getting a lot of questions, Katrina and Charith, and I'm just going to race through these because we've still got a lot to cover. And they may be relevant to Charith, Katrina, they may be relevant to you. Syed asks, what if my business and employees are eligible, but I don't have the cash flow to pay the employees? Am I obliged to pay my employees the JobKeeper payment?
Yes, that's a really good question, and I think it's a predicament that quite a few employers will be placed in. As the legislation is drafted, if an employer and therefore their employees are eligible for the payment, it effectively acts as a reimbursement system to the employer. So the employer has to make the payment and then the employer is reimbursed by the ATO. So yes, what if you don't have the cash flow? That's a bit of an issue. And I think that is something that you need to discuss with the ATO, because I certainly haven't seen anything in what I've read that addresses that situation.
Just make sure you get the right person on the other end of the phone with the ATO.
Yeah.
Another question, what happens on the other side of the delays or pauses to payments to the ATO? Will the full balance owing be due, or will payment plans exist?
Yeah, I might take that on, Tim. I think the full balance still will be due, but I think what they will do is they will allow a payment plan. And once again, I had this experience last week where they're not only allowed a deferral of up to 6 months and then organize a payment plan from there on. So I think you can either first defer and then go into a payment plan.
Okay, awesome. We've got so many questions, guys. So I'm just going to keep your answers short, but full of wonderful, actionable ideas and advice. This is from Ross. I have a full-time employee that started after March 1st, and he was filling a genuine need after an old employee left at the end of February. We will be keeping this employee post-COVID-19 and can prove that we have always had the same number of full-time employees. I have confirmed no one else will be seeking JobKeeper for him. Will I be able to apply for JobKeeper for him and argue about exemption for the cutoff date?
Oh gosh, that's interesting. So this employee was not employed until after the 1st of March?
Correct.
But the employee is still on the books?
And he was filling a genuine need. We'll be keeping his employee. I don't know. He's still on the books, yes.
I don't. Hang on. I think that it includes current employees, and the cutoff seems to be in relation to the 1st of March. I'm not sure if it applies to current employees who were employed as at the 1st of March, because I know with casuals, they have to have been employed by the 1st of March. Okay. And the same with the employees who've been made redundant on the 1st of March and then rehired. I don't know.
I'll let you mull over that, Katrina. Yeah. Maybe something else will come to you, but this is another one regarding the March cutoff. What about employees, this is from Robert, what about employees who have signed a contract prior to March but don't start until March, and there is a contractual engagement? Do they fall under JobKeeper or outside this?
Yeah, well, employees basically don't get on the books until they start employment. So it's not the date of the contract, it's the date that they actually first put their foot in the door.
Okay.
I might just quickly add as well, Tim, just with
quickly,
this,
please, Jared.
And the one before as well. I think what Katrina is saying is absolutely right. The way the law is written is it's the 1st of March is the cutoff date. However, the Treasury has granted the Commission of Taxation discretion to make certain decisions where you may not certainly need that. So I think my advice will be, if you're in those particular scenarios where you either miss out by a day or two or close to it, to get on the phone with the ATO and have a discussion, because the commissioner does have the discretion to grant certain concessions in those scenarios.
Okay. Yeah. Do you have the direct number for the commissioner, Chair?
I do not. No, he's not on my phone. It's
Alex asks, can you please clarify which casual employees would be eligible? Is my employee eligible if they took a few holidays and unpaid annual leave, although they've been employed for more than 12 months?
Well, basically, that's a really good question. And if you have an employee that's on a regular roster, they are going to be a regular employee and therefore they're going to be eligible. The problem is that if, for example, you're a catering company and you just call in the employees when you need them for a function, you've then got to determine whether or not they are regular. So working out whether or not they've been on the books for 12 months, well, you know, that's pretty easy. But then the issue is determining whether or not they're regular. So the test for this in the Fair Work Commission is basically as clear as mud. But what they generally look at is whether an employee has a regular expectation of ongoing work. And my view is there's kind of two sub-tests to that. And the first is whether the employee makes themselves available for a number of regular hours. For example, there might be a university student who says, well, you know, just letting you know, I'm always available to work on a Saturday or a Sunday. And then the next test is basically, you know, whether they are rostered on to then work during their available days. So an employee who takes off a period of time which is authorised by the employer, I don't necessarily see that as, depending on the length of time as well, breaking the connection and meaning that they're not regular. But unfortunately, everything depends on its own facts.
Case by case. Renee asks, if someone is a casual at two workplaces, how is it determined which job will distribute the JobKeeper payment to the employee?
They have to elect who's their primary employer.
Okay. Ben asks, how does sole trading work with JobKeeper?
The sole trader is eligible for the JobKeeper payment, and what the sole trader has to do is, just like an employer, a business, is established that they've suffered a downturn in their revenue to the ATO.
Okay. Charith, if you've got anything to add, I'll let you just jump in. Otherwise, I'll keep going. We've got one more question, and then we're going to get stuck into the final segment on overseas workers. So stay tuned for that. But it's so fantastic, all the questions that are coming in. Clearly, there's a lot on your mind. We get that. We're here to at least provide some advice and direction in solving and answering those questions. Jimmy asks, if we make amendments to our employee's contract for the 6 months under JobKeeper, when we get to the other side of this, you do recommend placing staff back on their original contracts, ? Or drawing up new contracts? That was touched on.
Well, what I would do is I'd try and have a self-correcting contract. And I think this is addressed by the covering letter, and you would put in there that these changes are for a 6-month period, and that the employee agrees, unless agreed otherwise, that after the 6-month period, their terms and conditions of employment will revert back to their original employment agreement.
Got it. All right, guys, that's the end of the questions for the time being. I'm sure there'll be plenty more rolling in, but Katrina, thank you so much. Charith, thanks for coming back. Listening and watching, if you'd like to connect with Katrina, you can do so via her firm's website at krlegal.com.au. That's krlegal.com.au. Thanks, Katrina.
No worries. Thank you.
Now, just a reminder that after the next session, I'll give you all the details about where to access this recording, plus how to register for future The Tough Get Going episodes. Our final specialist is here to help you navigate the minefield of how to deal with your overseas workers that hold temporary visas. He's the founder of Absolute Immigration and has been busy working with the federal government to provide recommendations on how best to manage overseas foreign nationals through COVID-19. Along with Michael's questions, he'll be covering how to manage and retain your overseas foreign nationals during this time, along with sponsor obligations, such as do you need to pay what you said you'd pay, and what if your employees need to work elsewhere? Please give it up for Global Immigration Leader, Jamie Lingham.
Perfect.
Hey, Jamie.
How are you?
Good, mate. Over to you.
Thank you. I've got to say, I was seriously note-taking for Charith and Katrina. There's a lot of really good bits of information in there, and as a business owner myself, there was a lot of benefit. So thanks to the two of them. Now, as you said, there's a lot going on. This is a moving feast. This is literally, things change every 24 hours. And when you said I've been dealing with government, you're not wrong. I actually just got off the phone about an hour ago to the department, just talking about the JobKeeper and welfare for temporary foreign nationals and or visa holders. And so there's a whole lot in that. And what I want to do is just cover off four main areas. The first being welfare. The second, I'll look at the visas and exactly what they're doing for the visas. Third, we'll go through businesses and how they're reacting, and in particular, hospitality industry, because the hospitality, travel, tourism, entertainment industries have been hit significantly by this situation. And so what we need to do is obviously make sure that they can get the best possible support. And last of all, looking at the compliance. So just talking about, what's going to happen in relation to the department and compliance. So just starting off on the welfare, the overwhelming message that we're getting from the government is visa holders are viewed differently from from Australian citizens. The key message is for them not to expect any welfare, not in the short term and probably not in the medium term either, which is personally, I think it's quite disappointing. This is a group of people who have definitely contributed to the Australian economy. They've called the need for assistance, and they've come and met the skill shortages areas. And so this is where we're really disappointed. We put together a submission to the department about 3 weeks ago. We had a call from the top levels asking if we could put together a paper that would address all the visa cohorts and how we see the government managing each of those different visa subclasses. And we put through a number of recommendations. Some of them have been received, and some of them you'll see have been coming out in the latest announcements, which is pleasing. But there are quite a number that haven't come out. So back to the key messages for temporary visa holders: not to expect welfare in the short term. The other message is if they can't support themselves, the government would like them to depart. Obviously, the more people they have here who don't have access to funds in Australia, there's more chance that they will be significantly disadvantaged. They'll turn into quite a vulnerable group if they lose housing, which they shouldn't, through the measures with the nobody's allowed to move people out if they're for 6 months if there's rent issues. But if they do fall into that group of marginalised people, then obviously there's chances they might move in together. If they the government wants them to know also that they can access health facilities because that's very important. And the government's got their eyes on different groups. Obviously, student visa holders, there's 562,000 student visa holders currently in Australia. And the overwhelming message there is that most of these people have come with the intention to study. There are concessions given by universities that, towards these students. And these students have all signed off that they actually have sufficient financial capacity to sustain themselves, at least for the first year of their course. So look, notwithstanding, there are going to be a number of people who are on student visas who are in financial difficulties, but it's not the primary priority of the government. There's social security support. We've been advised there is social security support through third groups. And I believe that's not limited only to Australian citizens and permanent residents. This is looking at third parties such as the Red Cross, who I understand have been given about $200 million. So I think that there is there is obviously other avenues, but the government is trying to not set an expectation that temporary visa holders in Australia can rely on the government for welfare. As I said, personal view, I think that given that these people have paid tax, they've contributed to the economy, that they've answered our call for skilled and experienced workers when there's definite deficiencies in the Australian market. And so that's, been, one of our disappointments. But I know that, Labor's heavily pushing and advocating for this. Christina Keneally's office, I've spoken with a number of times. They're very keen to see that there's some level of support. The other thing that's come up is the government's announced that people can access their superannuation. And I've this morning discussed with Host Plus. They've said that they believe everyone will need to register for MyGov, which you need 3 forms of ID, and they think that'll be the first step. So maybe if everyone on this call can advise their staff to beat the rush to get onto the MyGov website and register for MyGov. The second area I want to cover off are the visas. Stay lawful. That's my first thing. If you can't depart, then you have to keep yourself lawful. The government wants people to stay in their own lane. So if you're on a tourist visa, try and remain on a tourist visa. Obviously, extensions for things like working holiday maker visas, subclass 482 visas, or 457 visas is going to be difficult at this time. There is a COVID-19 visa, subclass 408. Now, that is a stream of the 408. Essentially, I'd like to call it as the reserve chute. And so, if you're 2,000 feet from the ground, you've got no other option, then you go for your 408. COVID stream. Now, this visa doesn't guarantee work rights, but if people are working in essential areas such as agriculture, or high skilled areas, or high need areas such as agriculture or healthcare or different things like that, they can certainly get access to this visa. But the 408's more or less to be responses for skill shortage areas. Now, one thing that we've been asked a lot about is who, particularly hospitality have asked who are they responsible for. The reality is that if you've sponsored overseas foreign nationals on 457s or 482 or even 407, which is the training visa, these are the people you're responsible for. We have also put in recommendations to the department that there's a relaxing of what's called a condition 8107 or 8607, which means that you can only work for the same employer in the same occupation for the same salary. Our strong recommendation is for the 17,000 people who are sponsored in the hospitality industry that they have this condition waived altogether so that they can look for alternative employment. Whilst we've got a number of clients in other industries who have reduced hours as opposed to totally standing down. The hospitality industry, it's very difficult to reduce hours if you're not trading, and we have a number of clients who aren't trading at all, and so therefore there's difficulties on that. So the other thing is that the department they know that companies are reducing hours on people, and which is fine as far as the compliance regime is concerned. I'll touch on compliance in a minute. But if you are going to reduce hours, the overwhelming message is this is not about exploiting people for the hours. So if you say, for example, reduce someone to 20 hours and then put them on $10 an hour, that's not okay. If they were paid $60,000 a year, that would have to be prorated to $30 an hour. So if you put them to 10 hours, it would be at the rate of $30 an hour. This would not be an opportunity for people to say, okay, I'm going to pay my staff less. There's been a number of comments and conversations from our side, from our clients, asking if they can reduce wages by 20% and keep the hours the same, which to me is interesting. There was an article in the Financial Review yesterday talking about exactly this matter with KPMG. Everybody's talking about reducing their hours, the salaries by 20%, but keeping the hours the same. Actually, I know that there's a number of companies that I have friends work for, they've reduce the salary by 20%, and because of all of the new working from home measures come through COVID-19 and probably making it a little bit more difficult and things take a lot longer, they're actually working longer hours. So not that I personally agree with it, but I guess that everybody's trying to survive the best they can through a very, very difficult time. The other thing I wanted to bring up is obviously we've said to every client, please don't make your overseas foreign nationals redundant. You can stand them down, you can give them leave without pay, but if you terminate them, then obviously that's going to put you in a different position, because once you terminate them, then you have to notify the department that you're actually going to cancel their visa. And the way the visa cancellation process works is that they will cancel the visa. The notification will be sent within 28 days that your person is no longer working with them, and then they will cancel the visa, and then, they will go back to the individual and say, look, Tim, we understand your visas, your conditions aren't the same. We're going to cancel your visa. You've got 28 days to get back to us. Now, our view is that the cancellations department is probably stopped at the moment, because even if visas are cancelled, it's very difficult for a lot of these people to depart Australia. It's not like playing timetables of times prior to COVID-19. Now, I hear about flights being changed all the time, and the feeling is that when the flight is ready to go, then they will tell you that they have a full flight. So as I said, overwhelming message from our side is do not make people redundant. You can stand them down, or you can give them leave without pay. And an obvious thing for this is when things do bounce back, and it is predicted that there will be a bounce back. And as you can imagine, if you're like me, you're locked in the house, sort of getting a bit of cabin fever. And I think that once bars are open and the restaurants are open, I think a lot of people will come back. You will need those sponsored workers. You will need those great chefs. But also, if you terminate them and you notify the department that they're terminated, then you will obviously have to go through the sponsorship process again. Now, this has costed a significant amount of money in recent years. Can be up to $10,000 in government fees, including the Skilling Australia Fund levy. And so therefore, I think that if you can hold on, there are mechanisms and you won't have compliance issues. One thing that I was informed today, which I'm very happy about, is the government's actually advised that the intention, even though this is not legislation yet, the intention is that if you have people working on a sponsored working visa, say a 457 or 482, the intention is to actually count the stand down time as actual work time. So if you've got to work for 2 years on a 457 or 3 years on a 482, this period, the COVID-19 period, will be counted as work towards that period. So I think that that's a really massive, massive benefit to a lot of these people, because we were afraid that the grandfathering provisions for the 457 would be affected. Now, just one thing I'm going to quickly cover off is we've had a number of calls who have had from people who have had staff who are offshore, who have gone on holidays. The worst one, I suppose, I've heard is there was a couple who went to Bali for a wedding, and they were both from the UK. They left their child with a neighbour. They said, we'll be back in a few days. This is going to be a great weekend. And they couldn't actually fly back. And ironically, the couple who got married were Australian could fly back, and this couple was stuck overseas. They are actually back now, which is great news. And there are exemptions for people coming in. Essentially, it's Australian citizens and permanent visa holders. It's eligible New Zealand citizens who can show that they have a residence in Australia or they're living here. It is partners of Australian citizens and permanent residents who may hold temporary visas. And it's also essential services workers. So we're finding doctors and nurses who are on temporary visas are coming in. You do actually have to apply to get these people back in. But also we're finding that there's compelling, compassionate circumstances for people to come through. Now, just 2 quick points. Being conscious of time, I know there's just so much going on in space as there is everywhere else. So as I said, the business don't stand down workers. I think reduced hours are fine, leave without pay is fine. We've got clients who are paying out annual leave at 50% per week. We're also telling people to go back to the landlords to negotiate rent, to go back to their utilities providers and seeing what benefits they can get from them. Because, I think in this time, everyone has to sort of lean in and help. Now, the last point I'm going to bring up is compliance. The dreaded compliance. This has been something's been growing and improving and getting, a lot tougher since the sponsored worker visa was introduced in 1996. And renamed the 457 in 2012 and obviously the 482 in 2018. So this is a very robust compliance program, and I sort of feel there's going to be a COVID-19 I won't say holiday, but I think that there'll be a lot more leniency during the COVID-19 period as to how people met their business sponsor obligations. I still think that you need to make sure that if you're employing overseas foreign nationals on visas, you still need to do your VIVO checks to make sure that they still do hold a regular visa. And as I said, this is really about no exploitation of overseas foreign nationals, particularly because they are a very, very disadvantaged group. In my view, one of the most disadvantaged groups at the moment. They don't have access to government fundings. They will get access to super. And as I said, I think that the government looks at that and says, well, if you get access to super, the $10,000, that might last you another, 20 weeks. And then I think if this situation continues, then we'll probably start to look at government stepping in and trying to give a bit more help. The other thing is, I suppose my key takeouts is, as I said, it's back to the welfare. Unfortunately, the temporary overseas foreign nationals, they miss out at this point in time, and that's pretty strong messaging from the government. Obviously, they have to balance up who's going to be, the Australian citizens and permanent residents. Also, the keeping people on, keeping them on their visas, even if you send them home, even if they can get home and they go home for 3 or 6 months, if they have a valid 457 or 482 visa, then obviously we would suggest that these people stay on their visa and they can still keep coming back. Now, Michael, I just wanted to go to you just to see how you're personally dealing with this and your experience with the overseas foreign nationals, and also how it is in the industry doing it. I'm really interested because, as I said, I'm getting lots of different things from people, but you're in the trenches, you're living it, you're breathing it. And so what's your thought on this?
Thanks, Jamie. Thanks for going through all of that information. It's really helpful. On our side, we're quite lucky. We've got quite a diversified group across the 3 venues, so we've been able to keep some activity going in the operations. So being able to keep anyone on working holiday visas, on the most part, employed in some way. I'm fully aware that that's not the case for a lot of people that have had to completely shut down their businesses, and as a result, put a lot of people out of work. There's been some great work done by Danny Valent, who's a Melbourne-based journalist who's really advocating for these people that aren't getting access to anything from the government. And there's actually a sign-up form that she put out on our Facebook group, and within a day had 1,000 people sign up to it that are visa holders that need assistance. And reading through those responses, it's absolutely heartbreaking. People that don't even know how they're going to feed themselves in the coming weeks. And when we live in a country like Australia, it's incredibly disappointing from the government and what they've passed down as within the short to medium term, there won't be any assistance whatsoever. And even looking at the voting that went on last night in relation to the JobKeeper allowance, it was basically the government voting against allowing any foreign nationals access to that is pretty harrowing from a nation like ours. It's full of migrant workers. You touched on these people form really the backbone of our industry. Hospitality in Australia is still not seen as a real profession for a lot of people, and what we've done for so long is rely on these foreign nationals to fill our jobs in our venues, serve the people of Australia on their night out, and they've provided so much to this country. And for now, to not allow them access to the same rights when they also pay tax whilst they're here is, in my view, a disgusting way to treat people that are actually here contributing to our economy.
Sorry, just on that, I agree. I think that it's un-Australian. I think that the Australia I sort of grew up in, and I'm 7th generation Australian. And I think that like there's always been migrants. I mean, it's heartbreaking, as you said. I mean, if they're not feeding themselves, I don't know if you're aware of the Red Cross and the funding that could be through that. I mean, I think it's a disgrace that the government's actually directing us to move to third-party providers, repair providers actually stepping in. And, you know, as I said before, these are taxpayers. These are people who've contributed to our society. They've contributed to our economy. They've come to really, you know, do the heavy lifting in areas. As you said, it's not taken, it hasn't been taken as a profession, not like it is initially where you're 4 years as a commie waiter before you're actually a waiter. And I think that, yeah, no, it's a disgrace. I mean, given that tourism, I think, is worth $52 billion a year to Australia, or it had prior to COVID-19. And so now to actually turn our back, not only on the visa holders, but also the employers of these visa holders. And the fact that, you know, if you want to sponsor a chef, it's going to cost you $10,000 in fees. And that was moved into a consolidated revenue, it was called. It was actually meant to be for the Skilling Australia Fund. I don't know what they've done. I think, to me, that was a bit of a sleight of hand, that they said, okay, well, let's get this training fund going. And so all the money that was channeled into TAFE and everything else, they've just got the overseas, the sponsors of overseas foreign nationals now to pay for that funding. But in my view, I think there should be a big pool. And in times like this is probably what people should be able, well, employers should be able to benefit and draw from. Because the other thing, I don't know if you're aware, if you have a nomination or position of refused for any reason, the refund provisions are so tight that I'm surprised the government wasn't wearing balaclavas when they announced this, because it is absolute robbery of what they've done. When a refusal comes, you go, okay, I've lost $10,000 or $7,200 in the SAF levy. And then all of a sudden, now we're in our time of need. There's this huge pool of money. I don't know exactly what that figure is, but I can imagine it would be the tens of millions. In my mind, we have that big pool of cash there. Some of it wasn't even used because the visa was refused. Why can't we now get into that? And as I said, I'm pushing hard through the AHA, the TAA, through Christina Keneally's office, you know, really trying to sort of get some traction. I know that colleagues of mine have been pushing through Tudge's office, but as you said, it's just, you know, there's been no response, and it is un-Australian.
Yeah, I think on that, touching on the reliance on third parties to provide the services and financial support is certainly a handball by the government, and we're in the early stages of pulling together a fund that we're developing through Worksmith to assist these people. And, you know, whilst we feel like it's obviously needed, in our opinion, it shouldn't be left to people like us to have to stand up and create these funds to directly support these people that have supported us for so long. So, yeah.
Just on that, Mark, how will you, that's really interesting to me. And with this fund, and I was just sort of thinking maybe there's other things as well. I don't know, like, you know, can you give food or clothing or toilet paper to these people? But are you aware of anyone else doing a fund like this? And I'm guessing this is just for the temporary visa holders.
Yeah, there's been a few grassroots funds in different cities pop up, specific to restaurant groups or specific communities. The one that we're developing will primarily go to people in need from foreign nationals, but also existing not-for-profits that's in the hospitality sector that also need assistance through this time. And then for us at Worksmith to develop out our platform further to then administer the funds through our platform. Now we're in the certainly the early stages of doing this and trying to understand how these funds will be administered correctly. We don't want to put ourselves in the position of you know, sort of the hand of God, but
you've been forced to, right?
We have been forced to, and for us, we keep coming back to the same point of these people need help, and even if we help a small handful of people, then it's better than what the government's currently doing. So we see it as a really positive step in the right direction.
Yeah, absolutely.
Hey, Jamie, I get the sense that you could probably go on for another 3 or 4 hours, but
yeah, absolutely. I mean, this is massive, and you know, there's 2.17 million temporary visa holders in Australia. There's 139,000 of them are sponsored workers. There's 567,000 student visas. So this is a massive conversation.
Yeah.
And the level of anxiety that comes through is unbelievable. We have literally been doing webinars daily, and we have been taking calls daily, and then sort of when the day finishes, then you can get down and actually do the work, because there are still people processing visas. There are still people needing our regular day-to-day stuff. But so I think this is great, and I applaud you and the team for getting this together so quickly, because this is what people need, is the information, so they can understand, okay, because there's a lot of, misinformation out there or fake news.
Yeah.
And I think, getting people to be educated of how it is, but also giving the reality of, how the government's looking at this.
I'm going to invite the other specialists back. We've got some remaining questions before we wrap things up. Jamie, this one's for you. It's from Zoe. She asks, are employees on bridging visa 820 or 821 pending PR eligible for a government subsidy, job seeker or JobKeeper?
Yeah, Zoe, that's a good question. When you're on a bridging visa, you're technically on your previous visa. So if those people came from a tourist visa or a working holiday maker visa, they're technically on that visa. On saying that, I do believe there's a special payment, and maybe don't quote me when you go and see Centrelink, but I understand there is a special payment, an emergency allowance or something like that. I can certainly put it up on the Facebook group, my understanding. Because if you are on if you actually did get the 820, which is the temporary partner visa, still a temporary visa, you do have allocations of funding.
Okay. This is a question actually for Katrina or Charith. It's from Chrissy, and she asks, in regards to sole traders being eligible for JobKeeper payments, is that only if that trader has no employees? Katrina, you're muted.
Okay.
And
There you go.
Well, that's a difficult question, because a sole trader is generally someone who's not incorporated, but people who are not incorporated can have employees. I do think that the sole trader really does just relate to someone who doesn't have employees, and you'd be looking at the other step being an employer who has employees. So no, I don't think you can have employees.
Okay.
I might just add to that just very quickly, team. Just with the sole traders, from what I've read, Katrina, we probably agree as well. So if you do have employees, you definitely get it, because once again, it goes back to the employees. For yourself, you can nominate yourself as an employee. So if you're a sole trader, you can potentially get the JobKeeper payment for yourself if you nominate yourself as an employee, in addition to the other employees who you may have.
Awesome. This one to the group, it's from Reese. Reese asks, how would you keep morale for workers if they work for a venue with over 50 staff, but now only need 10 at the moment? If all are entitled to JobKeeper from the employer, what would it be best to divide the hours between all so everyone is working for the $1,500 per fortnight? If so, what happens if a casual declines a shift? There's a bit in that. Even Michael, you could probably contribute to that.
Yeah, I might jump in. In relation to what we've done with our venues since the JobKeeper came through, is we've actually done the split and reduced full-timers hours down to allow part-timers work throughout the week. So we're able to spread that across the venues. Now, it is up to the employer, obviously, in this instance, when you've got 50 employees, but you don't need everyone at work. I would highly recommend that they still take people back, because you can get that subsidy directly from the JobKeeper allowance. Although I do understand that some employers won't have the cash flow to meet the gap between now and when that first payment comes through. So that is certainly a difficult conversation for each employer individually.
Okay. We have got a visa question probably for you, Jamie. It's a long one. Stick with it. Given the news about 482 holders being able to access their $10,000 super, and if that 482 visa employee has been made redundant, can the employer change their status to stood down so they can access their super? Am I right in saying if they've been made redundant, they cannot access the $10,000 super payment?
Yeah, that's a good question. I think what we have to keep in mind or understand is that making someone redundant from an employment law point of view and notifying the department or making it redundant from an immigration point of view are two separate actions. So I had a similar question a few days ago where a person had been made redundant, but the Department of Immigration hadn't been informed that they'd been made redundant. So, and Katrina, you might want to jump in just to clarify, because you're on the employment law side of things, how this would work. But what my understanding was, but that as the Department of Immigration hadn't been notified, well, the redundancy conversation was a conversation between the employee and the employer. And so the arrangement between them, if it had ceased at that time, they hadn't actually ceased the visa because no notification of cessation to the department had been made. And Tareth, I'll bring you in for the answer to the super part of the question, because I don't know how that works on redundancy and getting the superannuation, but I can tell you from a visa point of view, if you had made someone redundant and you hadn't informed the department, then my understanding is yes, you can turn around to stand them down because the visa will still remain consistent. And that's been our overwhelming message to employers. Try not to make people redundant. And even if you have, try not to inform the Department of Immigration. You had 28 days to do it, to inform the department as your sponsor obligations. Now, I suppose the next question would be, can you undo that cessation? I'd say yes. I think that, you know, more than happy for you to contact me, and I know the head of cancellations, and we could have a chat. I know that when you do cancel a visa, it takes quite a long time to actually go through the process.
Jareth, do you want to respond to that super question? And then
Yeah, I think once again, yeah, thanks for Jamie. I agree with what Jamie was saying. I'm not necessarily 100% across the visa holders and the superannuation link, but I do agree with your comments. I think it's almost two separate things, more from a visa requirements and your employment, and then the superannuation. To my understanding, it basically the superannuation requirement goes back to your type of visa. So as long as you are still on that particular type of visa, which therefore that's allowing you to access the super, I don't think the fact that you're being made redundant shouldn't have an impact. But I do put that as a little bit of a disclaimer because I'm not 100% sure on it, but logically, I think that's how it will work.
That's great, guys. Jamie, I just want to thank you for your segment. Everyone, if you'd like to connect with Jamie, maybe have any additional questions around overseas workers, visas, etc., you can do so via Jamie's website, absoluteimmigration.com. Now, if you got this far, we hope you received massive value from the sessions, and a big thank you to all those who asked questions and left comments. Fantastic. Sorry we couldn't get to them all, but I think we actually pretty much did. Just looking now, yeah, no, I think we did. So I'm not sorry. I'm very happy we got to them all. You can access the recording to this webinar on the Hospitality Industry COVID-19 Support Facebook group. And we'd appreciate if you could share it far and wide to other hospitality business owners that may not have known about it or didn't have the opportunity to get on the call. You'll find the recording on the Facebook group very shortly. And you can also stick around on that Facebook group ongoing to have discussions around these topics, and also find out when upcoming episodes of the Tough Get Going will be appearing. A big thank you to our three specialists, Charith, Katrina, and Jamie, and of course to Michael for representing the hospitality industry, all who volunteered their time and their knowledge. That's awesome. Along with the plethora, along with the plethora of other volunteers who've made this show possible. You know who you are, so a very, very big thank you for doing that. Until next time, please stay well, keep positive, and be sure to wash your hands. Bye for now.